What is accounting equation? The accounting equation states that a company's total assets are equal to the sum of its liabilities and its shareholders' equity. This straightforward number on a company balance sheet is considered to be the foundation of the double-entry accounting system. The accounting equation ensures that the balance sheet remains balanced. That is, each entry made on the debit side has a corresponding entry, or coverage, on the credit side. The accounting equation is also called the basic accounting equation or the balance sheet equation. The accounting equation is considered to be the foundation of the double-entry accounting system. The accounting equation shows on a company's balance that a company's total assets are equal to the sum of the company's liabilities and shareholders' equity. Assets represent the valuable resources controlled by the company. The liabilities represent their obligations. Both liabilities and shareholders' equity represent how the assets of a company are financed. Financing through debt shows as a liability, while financing through issuing equity shares appears in shareholders' equity. The financial position of any business, large or small, is based on two key components of the balance sheet: assets and liabilities. Owner's equity, or shareholders' equity, is the third section of the balance sheet. Assets represent the valuable resources controlled by the company, while liabilities represent its obligations. Both liabilities and shareholders' equity represent how the assets of a company are financed. If it's financed through debt, it'll show as a liability, but if it's financed through issuing equity shares to investors, it'll show in shareholders' equity. Assets include cash and cash equivalents or liquid assets, which may include treasury bills and certificates of deposit. Liabilities are debts that a company owes and costs that it needs to pay in order to keep the company running. Debt is a liability, whether it is a long-term loan or a bill that is due to be paid. Costs include rent, taxes, utilities, salaries, wages, and dividends payable. The shareholders' equity number is a company's total assets minus its total liabilities. It can be defined as the total number of dollars that a company would have left if it liquidated all of its assets and paid off all of its liabilities. Accounting equation formula and calculation: \text assets equals \text liabilities plus \text owners equity. Assets equals liabilities plus owners equity. The balance sheet holds the elements that contribute to the accounting equation. Locate the company's total assets on the balance sheet for the period. Total all liabilities, which should be a separate listing on the balance sheet. Locate total shareholders' equity and add the number to total liabilities. Total assets will equal the sum of liabilities and total equity. The accounting equation is a concise expression of the complex, expanded, and multi-item display of a balance sheet. Essentially, the representation equates all uses of capital, assets, to all sources of capital, where debt capital leads to liabilities and equity capital leads to shareholders' equity. Limits of the accounting equation. Thank you for your attention to this video. Please feedback us by commenting this video for improvement of content. Don't remember to like and share this video to your ideal one.